Hello, everybody. Today I want to talk about MicroStrategy, who is going through a major run right now, a catch up compared to the past few days where it was lagging Bitcoin. It is now catching up because we've gotten that 50 basis point rate cut that is going to make hard assets ever more valuable. Hard assets are divided by the number of US dollars out there, and the money stock, the number of US dollars out there, is just going to go through the roof now that we've begun this series of rate cuts towards, in my view, zero. In my view, will be to zero in a couple of years, probably. That's just what I think. No investment advice. Okay, so let's talk about MicroStrategy really quick. So what is MicroStrategy? MicroStrategy is an owner of Bitcoin, and they're the largest corporate owner of Bitcoin. They started doing this strategy in August of 2020 when they converted their cash on their balance sheet, which used to be held in treasuries. They converted it into Bitcoin, and ever since they've been a synthetic Bitcoin miner. What's a synthetic Bitcoin miner? It's you run a business. In the case of MicroStrategy, it's a slow growth, now a software as a service business intelligence company. They used to be a one-time sell software type business type of business intelligence company. Now they're kind of moving into the SaaS sector, but they run a software business. It's a slow growth software business that most people, I think, would not really be interested in to own as a single stock. It's not that bad of a business, but not a great business. What's great about it, though, is that they take the cash flows from that business and they invest it in Bitcoin and not in treasuries. Most companies, when they get cash, they're going to hold it in treasuries and invest in treasuries. MicroStrategy doesn't do that. It takes the cash and it puts it into Bitcoin. And by the way, I'm not covering this in this video, but there's also going to be a day where MicroStrategy is going to announce billions in earnings when they change to fair value accounting standards, which is going to be mandatory in early 2025. That's also something to follow. One of the main impediments to companies owning Bitcoin in the past was that Bitcoin needed to be marked down at the lowest cost that it traded in the quarter, which is why companies have been reluctant to follow that playbook so far. But we've had a lot of companies in the past year adopting the MicroStrategy playbook ever since we know that the GAAP accounting standards have changed. Companies are slowly adopting that playbook. Recently, a Bitcoin miner just decided to sunset Bitcoin mining and move right into the Bitcoin strategy playbook. Just own Bitcoin, just issue shares and buy Bitcoin. Coinbase and Block invest a share of their revenue in Bitcoin. Similar converted its cash to Bitcoin and is converting the cash flow of its QuantaFlow medical device into Bitcoin. Meta Planet is running a hotel. They run a hotel. It's a teeny tiny company who runs a hotel. They decided to use the cash generated by the hotel to buy Bitcoin. It's a Japanese company. Recently, we found out that SpaceX owns a bunch of Bitcoin and Tesla still owns a major Bitcoin bag. And there's obviously more. You can look at a whole list online. But we're seeing more and more interest in Bitcoin in companies. This really feels like the early days of the internet when, X company adopts a website, another company adopts a website, another company adopts a website. Fast forward 5 to 6, 7-ish years, and every single company changes their name to .com. I get that sense with Bitcoin. We're going to have more and more companies who are deciding to not hold their cash flows in ice melting treasuries and other forms of commercial paper. No, a lot of companies maybe will decide to hold their cash flow in something hard like Bitcoin, a hard asset like Bitcoin. So how does it work? MicroStrategy is a leverage bet on monetary expansion. It is what it is. MicroStrategy, building on my video from yesterday, so how does value work? How do you value a stock? Well, it's the money stock, the US dollars that are out there that stick to that stock. How many dollars are out there? these dollars stick to the rarest goods. They stick to homes more than, say, they stick to TV dinners. Because TV dinners, you can just crank up the factory, make more of them. That's why inflation is not very visible in cheap goods, but inflation is highly, highly visible in very rare goods. And out of all of the rare goods that are out there, the rarest of them all is Bitcoin. Bitcoin is the rarest good. So MicroStrategy owns 1.16% of this very rare good that is Bitcoin that cannot be debased. And even better, not only is MicroStrategy owning 1.16%, but they are growing the bag through active shorting of the US dollar. They're borrowing US dollars to buy Bitcoin, and they're borrowing huge amounts of it. So you have a company here that owns ever more of a very valuable asset that can't be debased. Every year, year after year, quarter after quarter, they accumulate more Bitcoin. So that becomes more valuable from that standpoint, and it's divided by US dollars, right? It's divided by US dollars, who, on the other hand, are not getting any rarer. They're not getting any rarer like Bitcoin. US dollars are simply being printed more and more and more, and we cannot stop monetary expansion. They dropped the rates, right? They barely made a dent in M1, and they dropped the rates anyways because the economy could not handle it anymore. So this is going to expand to infinity, and this company, in my view, is going to get ever harder. It's going to own ever more of that very hard asset that is Bitcoin that you can't make any more of, and that's what they do. That their strategy. They're borrowing billions of dollars of USD, which can just be printed away digitally by the Fed, right? We print it digitally from 60 Minutes, or by commercial banks. Whenever commercial banks issue loans, right? That money comes from nowhere. That is just inflated away. That is not nearly as valuable as Bitcoin, which has a fixed supply. It has a very fixed supply. And so what do we find out since they started this strategy of acquiring more Bitcoin? This is the recent announcement from 5 days ago. They acquired 18,300 more Bitcoin. They probably got another, more than $1 billion to go with the new issuance that they're doing, that they announced yesterday. Anyways, what they do is they dilute it creatively. They issue convertible notes that will turn into shares in the future, but they get to buy the Bitcoin today. That is their strategy. And since they've done this strategy, it's worth noting, this is their own corporate communication, that they have actually beat Nvidia since they started adopting this strategy. They've beat Nvidia. This is their performance from August 10. You can see that was an 11x. Nvidia was a little more than a 10x. Now, I went ahead and checked that with my own total return calculator. I roughly took the same number. Actually, took a little earlier, but that's okay. You can see I'm getting a 77.6% average annual return for MicroStrategy. I'm getting a 76% return for Nvidia. So the top performer in the stock market, at least in the large companies, that has been MicroStrategy. And MicroStrategy, of course, is not in the S&P 500. So when people say, the top performer in the S&P 500 is Nvidia, well, there's a company out there that is very big that would earn a spot on the S&P 500, and that actually outperform Nvidia, which, another reason why I don't want to own an index like the S&P. I think the only index I would own is QQQ. That's the only index I own, by the way. Let me move on. So how does this work, you may ask? Why is it valuable to dilute to buy Bitcoin? Because that's what they do. They are diluting the shares to buy Bitcoin. Well, that's because of this concept that they introduced in the last AK form, which is the Bitcoin yield. MicroStrategy is now focusing on this Bitcoin yield, and year to date, they are accretive to the yield of 17% more Bitcoin per share, and that is on a per share basis. And how do they do that? Well, let me show you a calculation quite simply. In December of 2023, they had 189,000 Bitcoin. Right, in September 12 of this year, right, of this month, September 12, right? Okay, so 7 days ago, they had 244.8 1,000 Bitcoin. So they grew the Bitcoin pie in the last 9 months. They grew the Bitcoin pie by 29.4%. Okay, and you may say, oh yeah, but they diluted to do that. They totally diluted to do that. Well, yes, they did. But by how much did they dilute? They diluted only by 10%. The assumed diluted shares outstanding, which is when they will issue all of these extra shares right here, when those will be issued, right? You can see they only diluted by 10%. If you include that, they only diluted by 10%. So over the long run, if you own this stock for the long run, you'll see dilution from all of these activities. You'll see that dilution to be only plus 10%. And they've agreed to dilute plus 10% in the past 9 months in order to grow their pie by 29%. But look at what price you're going to be diluted, right? Okay, it's very much worth it. The stock is 148 right now. You're going to be diluted in 2032 at 204. What do you think the value is going to be in 2032? I think it's going to be leaps and bounds ahead of 204. Not even funny how much higher it's going to be. And so that's how you get to a 17% yield. By the way, when I calculated myself, I actually get an even higher yield than that. But that's because, from my understandings, because they didn't necessarily include the RSUs and the PSUs invested in their calculation. Doesn't really matter. The point here is that you're doing a 2.5x above the dilution is what you're doing, roughly 2.5 to 3 times the dilution. For every 1 of dilution, you get 3 of new Bitcoins, if that makes some sense. So it's absolutely accretive. It is a very accretive way to do it. And that's what MicroStrategy is doing, and they're going to keep doing it as long as they get demand for these convertible bonds. As long as these convertibles are subscribed by the market, they will keep doing it. What's the playbook? You borrow a depreciating asset at near zero interest rate via your convertibles, and then you buy Bitcoin with it, and you pay it off later in the future via that dilution. And that is how MicroStrategy achieves that BTC yield. That is how they grow the pie per theoretical future diluted share. And so to me, that's a pretty insane strategy. They're actively shorting the US dollar. They will do it as long as asset managers want to buy these bonds, and they do want to buy these bonds because if you're a bond investor, it's not very exciting, all of the things you can invest in. And through MicroStrategy, as a bond investor, as a company that says, or a hedge fund or a pension fund that has a mandate to invest in bonds, well, you get to access a pretty exciting asset with pretty exciting return. You get to access that, right? And otherwise, you couldn't access it because you can't necessarily always buy stocks. Michael Saylor talks about this very clearly. And I'll conclude with this. If someone could borrow $1 billion at a 0.625% interest, only to buy Bitcoin, would you do that? Would a company do that? Would a public company do that? Individuals can't. But if individuals could, the odds are a lot of individuals who believe in Bitcoin would take that bet. And MicroStrategy is taking that bet with his company, and the company he controls and he built his whole life. And that is, in my view, it is very respectable. I am very happy about this stock. I am so happy to be on this journey. I can't wait to see where it's headed. When it joins the S&P 500, in my view, this will be one of the highest performers in the S&P 500. In conclusion, this was not investment advice, not financial advice, just entertainment. Hoping you were entertained. Please like, please subscribe. Thank you for watching, and have a wonderful day.